Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Wednesday. I don't know if it's going to be the best trade today. Oh, how come I'm not hearing... Oh, hold on a second. Gotta restart my audio engine. There we go. Can you hear it okay? Yeah, all right. Do the charts. So yesterday, yesterday was an interesting... Should we start with the S&P 500? Because yesterday, that trade that we did, that sim trade that we did, that could not have gone better. It went right, you know, it was just kind of a coincidence that when we were looking at that thing, it happened to be at that level. And we took the short. If we had, I didn't get the 10 ticks here on stream, but it didn't take very long for it to go down there. And then, man, if you'd held it, whoosh. Now, I think it was just luck that it happened to go down because we got a bunch of headlines from Oracle and Nvidia and stuff that really hammered the market. So it was a seemingly ugly day yesterday for equities, but, you know, like, we're so high. It's just a little skip down. It's okay, right? Treasuries, in the meantime, rallied pretty hard. Not really too much during our session, but afterwards, when the stock market was getting hammered, yeah, they were jumping up there. They were jumping up there a ton. So... Treasuries, you know, and I feel like that this level around here is pretty good. But we have the FOMC meeting minutes today, and I think that that's going to be really important. We're going to see, like, how much of that change was like, yeah, we're really concerned about the economy, and how much of it was like, well, I guess we kind of have to because the data, you know. So there could be some big things. So I think the market will get a lot of insight into where we're at in the FOMC meeting minutes. So... Oil, looks like it's continuing its jump up. Again, the reason we dropped from here was because OPEC was increasing output. And then down here at the bottom, they said, oh, we're not increasing it that much. So we might come back up. You know, I would expect oil to continue going back up, but it's been slow. So, but up yesterday. The gold and silver trade just keeps getting more and more zany. I mean, like, when they broke out to new highs, it was kind of crazy how it happened. Don't you think? This last week and yesterday, like, there is some real crazy stuff. There is a real stampede going into gold and silver as well. They're still not to 50. I really want to see silver over 50. Copper also moving up along with the metals context. And then the Japanese yen. I'm starting to get concerned about the yen. Now, where are we from a daily perspective? Like, look at this. We are just beelining to the lows. I find that very concerning. Because all year it's kind of been, you know, like, this has been okay. Then we get this new soon-to-be prime minister comes along, and the Japanese yen just completely falls apart. And I think part of what's going on here, like, I don't think that, you know, what happened actually will have that big of an impact on Japan's trajectory. But it doesn't take much to get it started. And then you got all of these basis trades stopping out again. So this is a problem. If the Japanese yen doesn't turn around, that could single-handedly cause a recession. That's well, and then over here on Bitcoin took a big hit yesterday too. It's kind of interesting to think about it. Like, okay, the weak labor market, that could single-handedly cause a recession. The government shutdown going on too long, that could single-handedly cause a recession. Let's do this yen. We use this yen. That's two. The Japanese yen, that could single-handedly cause a recession, right? Bitcoin, well, I think that Bitcoin's a slightly lesser risk at the moment, but if Bitcoin fell apart, that could single-handedly cause a recession. Maybe I'm reaching on that one, but it could. And then fifth, definitely, like AI spend collapsing, that could definitely cause a recession. So there are so many things right now that I think could cause a recession. But then when you look at the numbers and everything, like everything's hunky-dory and it's fine and we're like at all-time highs. Maybe the market is not hedged enough. I don't know. Maybe not. All right, what do you got here, Woozy? It's Wednesday, and I have a giant chunk of oak in my driveway to clean up after hitting. Oh, dear. Oh, dear. What kind of an oak? Is it a white oak? Make sure to quarter saw it so that you get the specklies in it. That's the way to do it. That's the market. Good morning, Microfinance. Is that a new name? Well, I think you've been here before, but welcome to the stream either way. Octavius, PayPal. So, let's see here. I learned you can turn off the YouTube live chat leaderboard. My name shouldn't display a rank number anymore. Oh, really? So you can turn it off per user. That's interesting. Huh. Treasuries are on the upside. So we got two things in the 10-year today. Excuse me, I'm having some bowel troubles here. It's like hard to focus. I don't know what what it was that I did is I ate a fry before I went to bed, and I think that's just got my gut is all. Actually, you know what? I might get into like this big long rant about something. So I'm gonna take a second here and make sure I'm all good, okay? Okay. What'd I miss? Not too much, although the E-mini is turning up a little bit. So, what was I going to say? Oh, yeah, I was going to say, we kind of got an interesting setup today because we have FOMC meeting minutes, and I think that that's going to be super important. But then we also have a 10-year auction today. So, that kind of sets up an interesting situation where you've got an auction ahead of relatively significant data point, right? So we might see some weird flows over here in the 10-year Treasury. Now, over in the S&P, let's come over here and check our gamma exposure. Has it changed much from yesterday? I wouldn't expect it to change too much each day. Still at 6,800 and 67.50. And we're right smack dab in the middle. Okay. But we are seeing the E-mini buy up again. Part of me wants to say that just because of the meeting minutes that we're not going to get a lot of movement and that it's going to be a really tight market again. But I do think that there's a chance that you'll see a flow here, especially after the sell-off that we had yesterday in equity indexes, right? So I don't want to just completely blow off the possibility. Yeah, I've been looking at it like, what are we gonna do when the current contract job ends? Which I gotta be careful talking about it because thinking about it makes me feel depressed. I tell you what, man, I feel like that oftentimes I wish I could take more risk. But, you know, I've got a family and kids and all of that sort of a thing. But before, it was really rough before. But, you know, we had the unemployment. And then when that ended, that's when an opportunity magically materialized. So maybe heaven is watching out for us. But this time around, I do have some, I don't know, I haven't started any interviews, but I do have some opportunities that sound promising. Certainly a lot more promising than the stuff from last year. But they haven't started interviewed yet. But, you know, those things take time. So either way, we're going to have a little interim period where, you know, what are we going to do? Although it should be fine until the end of the month, right? So I'm staring into the abyss now. But I probably will do better work staring into the abyss. So I do kind of feel like this is a situation where we got to burn the boats so that I do what's got to be done. Don't have anything to fall back on. Yeah. But what got me on that was, well, one of the things that I should probably do, and that I'll be doing during the day, because I'm kind of like not taking on new projects now, so I do have a little bit of downtime during working hours, and I can do this AWS architect study. What did I call that markdown document that we made yesterday? Livestream ideas. That's it. So I think if we are going to take another equity trade today, I don't know what it would be based on, but I don't think that it's going to do a whole lot for another 10 or 20 minutes. So we have some time to think about it if you guys have sort of a setup that you want to toy with. Keep an eye on the Japanese yen over there in the corner of the screen. Eagle Eyes, good morning. Morning, Belligerent. Come back. Yes, I was about to say, I think you're a new name. I haven't seen you before, so welcome to the stream. Now I'm like, oh man, there's a new person. We gotta show them what we got, man. Gotta do something amazing so they'll stick around. But pretty quiet market at the moment. I would say the amount of level 2 activity that I'm seeing in the treasuries seems to be a little bit more than what the actual price movement would suggest. It's been a very tight price movement wise. But like I'm kind of seeing, like, look at this this chart over here. You see how thick it is? So we're definitely got like a sort of a liquidity hole sort of a situation, like a perpetual liquidity hole situation going on. But there is some trade going on. Curious. Hank Green just posted a 3-minute anti-AI rant about sort. You know, that was recommended to me, and I didn't watch it, and I guess maybe I will. Because I feel like Hank is one of those guys that he feels like his lane is everything, you know? Why am I not on the right screen? You know what I'm talking about? Like people just don't stay in their lane. Well, I try to stay in my lane, but you know what? Sometimes you got to pick up new things too. I think one of the first things that I want to do, actually, I can put it over here. Let's come back over to this thing. Videos. Yeah, we'll put it here in videos. I want to make Ninja Trader basics video. I want to make maybe like top paid tools video. And then I want to make a vibe coding video. Because I tell you what, I have used AI to assist in programming quite a bit now at this point. I feel like at first I didn't because it wasn't actively working. But in the last 6 months, I've used it a lot. And my boss, he is like, the reason he left, is to go and become a staff engineer in charge of AI. Or AI coding or whatever. So he was doing, which was kind of funny because it was like he hadn't been doing as much programming. But so I feel like I got a really good feeling for what you can do with it and what it's good at and what it's not good at. And I think it would really be useful to the channel because there's a lot of you trying to vibe code. Like I have gotten so many, especially early on, so many requests where they were trying to vibe code something in Ninja Trader and they couldn't get it to work and they needed my help. So that happened a lot. So like teaching people how to vibe code better would help me a lot because then I would get less people pestering me about those sorts of things, right? But my takeaway and the thing that I'm not seeing people say, the thing that I'm not seeing people say that I think is important is that using AI is a skill. Like, it's something that some people are better at than other people, and you can improve your skill with it. So I want to make a video about some of the tips that will up your AI coding skills. That's so maybe that becomes a new lane for us. We'll see. But yes, Sora 2, kind of crazy. AI is misleading a lot. Ask me about. Well, so I haven't really seen an instance yet where like something was faked with AI and people just believed it or took it for granted and or maybe a government used AI to put a video out to mislead people, and then it later came out that it was AI and we all felt lied to. There were certainly some situations during, well, actually, I would say both during the Biden and the Trump administration, where at the very least people have accused them of using AI. But I think mostly just to try and make a video look better and not necessarily like fake something, right? But Sora is definitely to the point where it's like believable. But I think it's just that nobody believes it because like it's, you know, it's an AI slop account. So you just know, well, it's an AI slop account. So no big deal. Information gathering wise, well, I don't know, man. I feel like that AI, well, so this comes back to the, you know, it's a skill sort of a thing because there are definitely some issues. But if you do it the right way, I find that AI can be really, really good at that. Some lawyers have gotten into trouble from judges bringing up fake hallucination case law. So, yeah. So here's what happens. Man, I think that it was like the way I was sitting on the couch yesterday or something, but my neck is kind of hurting. I'm worried that it'll get worse as the day goes on. So here's what happens is you come in and there's a court case, okay? And we're making a certain argument. And so you go to the AI and you say, write me up a court case argument arguing why, this law shouldn't apply to my client, right? And if you tell the AI that, the way that AI is trained is basically to give you answers, and it will like guess or make things up because the reinforcement learning reinforces that, essentially. But if you turn around and you ask it, can you find me and cite cite and summarize some court cases that would be relevant to this particular legal situation, right? Then what it's going to do is it's going to search the web. It's going to search through all of the lawyer texts that it has, and it's going to find those individual things and cite them to you, and summarize them. And then you can, double check that source actually exists, right? And if it actually exists, it's not going to make up the summary. So it is an issue of prompt engineering, essentially. If you prompt it in the right way, you can avoid it making stuff up. And then, of course, even then, you still got to double check it. But what's happening, and this is why I think it's important to understand that AI is a skill. Because what's happening is everybody is lazy, and they looked at this and they said, oh, AI is an opportunity for me to be more lazy. Right? The AI is just going to do everything for me. And so then what happens? They don't put in the work. They don't double check what it says. I've certainly had some situations where I didn't double check it as thoroughly as I should have, but you learn. I have found so far my use of AI has required more of me. I'm doing more work. I'm doing a deeper work. I'm doing more sophisticated, complicated work. And I'm learning more. Because the AI is like, oh, well, you could use the X thing. And it's like, well, what's X thing? Describe that to me. Give me some links. Then I go and I learn about that thing. So just don't be lazy with it, right? That's why, like, once you start thinking about AI as a tool that there is skill in using, changes your mindset. And then you're not so vulnerable to those issues where it just feeds you nonsense and you just parrot it on, right? Under the indicator backlog, you misspelled. I did. Who cares? I'm the only person that reads it. Cache volume differently so that you can change market order imbalance parameters. That is something we can do. I honestly don't really feel like doing that right now. like of the things that I could work on right now. I'm thinking that I do want to work on my platform. So I think can we do it? Well, I don't know where I'm going to put it. But I think that starting out here, so starting next Thursday, I guess, the plan will be time boxing certain number of hours to the trading platform, writing our own trading platform, and time boxing a couple of hours to studying for a certification. I have an idea. Why not try to make a genetic algorithm where each generation of traders learns from the mistakes with reward scores and training on MBO MVP data to have more precise rules? Oh man, you're opening up a whole can of worms. So here's the thing, microfinance. Back in 2018, I think it was, this was a really popular thing. And they had all of these algorithms that basically had a library of every technical analysis indicator you could possibly think of, and they would combine those in various different ways. NinjaTrader actually kind of has some stuff to help you do this, although the things that it ends up programming in them like don't make sense. So it doesn't seem to be very effective. But this was a really popular thing for a while. And my understanding of it was that at first they were making money, and then it became popular, and that like whatever was the edge kind of was constantly changing. And then they would start to find patterns in the way that that edge would constantly change. So it was like, you know, this continuation trade was the play, and then it would shift around and it would turn into this mean reversion play, and right, it was just kind of going along in a circle like that. So that space became a lot more competitive. And then what happened, like I said, in about 2018-ish, there was this situation where, similar to what's been happening in current markets, everybody and their dog was shorting volatility. It was like it became a thing. Just come in, doesn't matter what's happening, just go short VIX futures and you would make money. And when that trade blew up, the volatility just like skyrocketed in one day, and all of the market making algorithms hold all of their liquidity. There was no liquidity in the markets whatsoever. I think that someone major got like blown up, and all of those genetic algorithms got absolutely decimated. And it is called the Great Quant Crash. The Great Quant Crash. And ever since then, at least within the context of day trading, I do not hear people talk about genetic algorithms anymore. Isn't that interesting? So, we could do a little bit of that though. But I think that these ones that I have up here, where did I, oh, over on this side, random forests and XG boost are things that we want to tackle first. So, I don't think that random forests will actually be that super useful to us, because the problem with the random forest is it kind of assumes a Gaussian distribution. So it might help us for certain kinds of mean reversion plays. But I want to learn random forests because I want to learn the algorithm, and I'm going to program that one from scratch. I'm going to program that one in C#, own random forest, so that I know how they work. as an introduction to machine learning algorithms themselves. Because there's this whole world where, you know the general idea of what the algorithm is doing, but you're using somebody else's library that does the algorithm for you, right? Now I want to understand random forests from a deep level. XGBoost, on the other hand, is kind of a step up from that, because XGBoost does not assume any kind of a distribution. And so it will look into, is this exponential? Is this what kind of a distribution is it? And look into that. And so for like tabular data, XGBoost is a little bit more effective for that. So our thinking is that if we pass a bunch of our order flow features into XGBoost, that we will get a better result. By the way, we didn't turn the robot on, and I don't like, I honestly, I don't want to have it on because I know that it'll take like terrible trades. But how about we do this? How about we come in and we say use targets, but like have the reward factor be like really stupid. Like, let's have it be, let's have the reward factor be like 0.15. Can we get away with 0.15? 6, 3. Let's have it be 3. Let's have it be 0.2. That'll make it more interesting. Yeah. Enable. There we go. Yeah. And then, I don't know, once I understand XGBoost, maybe I can go beyond that. It's kind of funny how things all happened. Like, I was starting to get into machine learning stuff. We wanted to get more into that. And then AI stuff kind of came along, I guess. And the machine learning kind of got left in the dust, which I think is really, really ironic, because I don't think that very many corporations have really effectively taken advantage of the machine learning. There are just so many processes out there and everything where there is an optimal answer, but it's too complicated for you to just sort out on your own. And a machine learning algorithm can help you there. And business just not taking advantage of it. So I think there's a lot of efficiency improvements that could come from there. And those would be, like the funny thing about those efficiency improvements is those aren't efficiency improvements like, oh, well, we don't need as many people, we can just fire people sort of a thing. No, these are efficiency improvements like it just makes your product more valuable. Like it just straight up increases your margin, Why wouldn't you want to do that? Well, because it's hard. You have to have good data. I think we're going to run into some issues when we try and do XGBoost with this, that it's going to be like, there's some issues with our data. I bet you. So that's always how it works. I have a question. Can stops be detected like Bookmap does? Okay, so Bookmap can detect when a stop is triggered. So we should just be clear about that. There's no way to see resting stops, but there is a way to see stops after they have been triggered. And I can explain theoretically how this works. I've never seen the code or how it is done, or to be able to do it myself, because I've never had MBO data, but we have had it described. And I think I understand theoretically how it works. So regular market data basically says there are 2,600 limit orders at 112.26 in the 10-year Treasury, right? And then it updates it again, and it says, okay, and now there's 2,200, now there's 2,000, and you're constantly getting an update, right? In MBO data, instead, what they do is there's a bunch of orders in this queue, orders 1 through 1,000, and then it will come in and it will say, okay, order 568 was canceled, right? So because I'm getting updates on a per order basis, I can tell with complete accuracy, with complete accuracy, where I am in the queue. And I can also tell with complete accuracy whether a market order was a buy or sell. Because there's this kind of issue where, like, I get a market order, it comes in, but like at the exact same time, the best bid, best ask also changed. It's hard to know if that order was buying here or selling here. So there's about a 10 to 20% of volume could potentially be miscalculated in quick market action where price is changing a lot. And with MBO, you can see, oh, okay, those orders were filled. So every time that I see an order update that is an order was filled, then I know that was, market buy orders or market sell orders or whatever, right? Okay, so that's what MBO exists for. Okay, you get an update on a per order basis, and it will give you updates like, okay, update order new quantity, update order canceled, update order filled, something like that, right? Or new order, okay? So if I have a market order, it should come in and it should say, new market order, right? But if I see an update that is essentially updated market order, well, that doesn't make any sense, does it? Because a market order should go to the market immediately. So how can it be that an order was updated into a market order? Well, because that was a stop. If it's a stop, and then when that order converts, it will show up in the MBO as a market order update. And that's how you determine that they were stop orders. Okay. So to detect it, you need to have MBO. And yeah, Bookmap has a little thing that will show you like how many market stop orders been triggered during that time period, buy versus sell and whatnot. But I don't have that. I'm not willing to pay for MBO data as of yet. I think that if we get our trading platform to the right spot, to where I can do it's doing charts, and the basics of our Python scripting framework works, so that I can start writing my indicators for the new platform. And then at that point, probably I work on building a Rhythmic API connector for the platform, at which point I would need the professional data, and that would be MBO. And then I would have MBO. And so I think that our new platform would be an MBO platform. But right now I don't have it. And I do question, of course, we don't have any data, nor have I ever seen any study on this. But my theory is that once you get stop orders, once you can see that it doesn't actually tell you much. That the location of stop orders is, for the most part, random, except for certain aberrations that we already know about. Most particularly, that there tends to be more stops and take profit orders around large numbers. So if we were on a trend up and we're heading to 113, it's going to be harder for it to actually reach 113 because people are going to have their limit orders to take profits ahead of that. And if it does touch 113, they are likely to pierce through it for a couple of ticks because everybody puts their stop orders just after the 113. So it's kind of funny when it comes to technical analysis that the most verified and reliable technical analysis phenomenon that we know of is round numbers, which is not anything that a technical analysis person would ever talk about. It is something that what is that book? Reminiscences of a stock market operator. He talks about that, right? He says that like anytime that you come to a round number in a stock and they touch it for the first time, they usually rally quite a bit after that, right? So that one's a real thing. That's a real thing. He called it piercing through par or going through par. Yes. Actually, I don't remember what he called it, but I'll take your word for it. Yeah. So if we were to see triggered stops, I would expect us to be able to verify that which has been shown in other studies. But otherwise, I don't know if I would. So like a market stop order does not have. I would not expect it to have more or less impact than any other order. So the impact on the market should be the same. And I wouldn't expect it to have any kind of autocorrelation either. Like if you see a stop, you're more likely to see more stops in the next 5 minutes or something like that. You know? That would be the sort of thing that we would study, but my theory would be that you wouldn't see that. So I think that being able to see stops is a useful piece of information, but not tremendously so. Or rather, I don't think that there's enough information in it to justify the $100 a month for it. But that's just me. On the split side, there was a study where they passed MBO data into a neural network, and they found that having the MBO data versus not having the MBO data improved the performance of the neural network. So we do have some evidence to suggest that MBO data is useful to machine learning algorithms. It's a good question. We haven't talked about that one in a while. Oh man. So I'm going back to my morning browsing, seeing if there's any kind of news that we should be aware of or anything in social media that might be interesting to discuss. And I pulled up this thread in Recruiting Hell that kind of stuck out to me. Big thanks to this amazing job market. It was sarcasm. This person, my inability to gain a job has cost me everything that I cared about in my life. So screw recruiters, screw the job market, and screw capitalism. I have been painfully unemployed for 3.5 years. Oh, that's awful, bro. Wow. And okay. In that time, I've looked and applied to any opening I could find that was even remotely qualified for. I have 5+ years of various levels of IT support roles and multiple IT certifications, not to mention all of the upskilling and new certs I've earned in this time frame. Remote, in-office, hybrid, low pay, no benefits, doesn't matter. My one and only requirement was that I could sit while I was at work due to a car accident. 8 years ago. Oh, wow. He's probably old. Probably the problem. So I was thinking about this morning. Okay. So first of all, it bothers me that this guy says screw capitalism. Just anytime that people start talking about capitalism, because I don't think that they're actually talking about capitalism. To me, capitalism just means that there is private ownership of capital. That's all that it means, really. And the reason that we have been so successful in the modern day is because of improvements in financial markets. So I think one could say that we've been in capitalism since the post-Renaissance period to some extent. That there's been private ownership of capital like that whole time. I would consider feudalism slightly different, because even though there's like private ownership of capitalism, it was like so highly concentrated that it was, kind of functioned differently. Okay. But like we've been in capitalism for a long time. So you would have to have a way of differentiating like capitalism post World War II. Or actually, let's not put the cutoff at World War II. Let's put the cutoff at like 1880. Okay, I think you have to have a way of differentiating capitalism post 1880 and before. And the thing that changed around that time was that the stock market became a more powerful thing, essentially. You could call that part of capitalism, but maybe we should have a different word for it, Almost everything else about our system is up for discussion. We got to understand the solution space, right? And that's where you can look at the way that certain rules are and things like that and can see that it leads to certain outcomes that are not necessarily what we want. That is especially true in the area of corporate governance. I don't like the way that corporate governance works, because it basically turns into the board has complete power. Like, yeah, you can vote, but you're never going to win. Like the amount of times that the shareholders win over the board, very, very rare. Doesn't happen very often. Even in some of these really prominent cases recently, like with Disney. Maybe we should change some of the rules there to even the odds out. Maybe we should change some of those rules so that labor has an easier time negotiating with ownership. Things like that, Okay, so one of the big problems that we have right now is the labor market. So what would we do with the labor market? Well, I'm not sure. I've heard some suggestions. Like one of there's some companies that want applicants to have to pay to submit for a role because they get too many people spamming, even if their resume isn't even remotely qualified. They send it to everything, and there is so much junk that is sent to them that they just can't handle it. Even with the tools, they just can't handle it. And I think that a lot of good applicants are getting lost. Canceled. I think that something that happens a lot now is people will go in and tailor their resume to every job application. And so recruiters find enough people that 100% match the filters. But then all of those people that are doing that aren't actually qualified because they're basically lying. So that's broken. That's broken. But then, can you imagine if we had to ration jobs? Like there are more unemployed people right now than there are job openings. And it's probably way worse than that because we know that so many of the job openings are basically fake, right? So then you come in, you post a job listing, you get thousands of applicants, even after you filter it and you only have the qualified applicants, and you interview people, And you could still have like 5 people. Well, you have a limitation on how many people you can interview, right? But maybe you have 3 to 5 people. They're all qualified. Which one do you pick? The one that you like the most, I guess. But then that leads to certain imbalances, inequalities. Like there's a certain type of personality that's maybe not going to be as popular, but can still make a difference to your business, and we still need the economy, right? Like, what do you do with that? Well, maybe you could say you have to pick the person that's been unemployed the longest. Wouldn't it? I mean, it's kind of an interesting one, because as a business, I would be thinking, okay, so you're forcing me to pick the person that's the most likely to be the worst of them, because if they've been unemployed the longest, there's probably a reason for that, right? But from the perspective of the economy, wouldn't the best thing for the economy be to, keep people as unemployed for as short of a time as possible? Right? To reduce the length of unemployment, right? Well, of course, none of those things are ever going to happen, but it's kind of curious to think about, isn't it? Why are treasuries so dead, asks Kay. Well, so there's a couple of reasons here. First of all, I would say that there's actually more activity in the treasuries today than there was yesterday. Is just not a lot of movement. But there is some activity coming through here. There is a 10-year auction today, and there is FOMC meeting minutes today. And I think that the FOMC meeting minutes are going to be more important than a regular FOMC meeting minutes. So the market's definitely going to be watching on that. Another thing that we've noticed is that since the government shutdown, the treasuries have been really quiet. So I think the reality there is that the Federal Reserve Bank of New York is responsible for a pretty big chunk of the activity in the treasuries. So without them, it's a lot quieter. Because, yeah, I don't think we've necessarily had the best so hold on, what is I'm looking at my algo trade over here, and I'm a little bit confused. Oh, okay. No, that still doesn't actually make sense to me, though. See, isn't it? Oh, okay. Oh, okay. So did it take profits on that? No. It should have been short. It's saying it should have been short. We didn't start the algo soon enough for that. It would have taken profits. It is now in a long. Okay. And am I okay with that long? I guess, but that's kind of that's a little iffy of a thing to be entered into a long off of. Well, the S&P 500 is about to start up here, so I don't know how I feel about this one. Yesterday was just so perfect. I felt like that we could have a sell-off, and then kind of felt like they were boosting it going into the open, and so I kind of thought, yeah, I think they're bringing it right up to this gamma level so that they can sell it. And that is like exactly what happened. I don't think that that's like necessarily why the trade was successful, or but in that case, my logic, it played out perfectly. I think it was kind of luck of the draw that it played out perfectly, but it did play out perfectly. But I think that kind of shows the power of those options levels, doesn't it? Right? Is that you might be wrong about why it's moving, but because the options market makers have to take on orders there at that point, it increases your chances of winning anyways. Time to start trying to harness that power. Yeah, well, it doesn't, I don't know if it helps us for today. Probably we need to go and calculate the implied volatility targets for the S&P 500. See if the S&P 500 reacts to those as strongly as the Treasury reacts to its implied volatility targets. But today is probably like a really bad day to test anything like that. Like it's just going to be tight because of that meetings minutes. So that, which is, it's okay. That's okay. I know it's funny. We only got 30 minutes more. I tell you what, man, I did not appreciate at the time how much of a difference like being able to stream all the way to 9 o'clock is. We'll be able to do that again, and it'll probably be like, oh, this is so much time now, I don't even know what to do with it. But I guess, so today I have a dentist appointment. It was funny, yesterday I worked from home because I had another doctor's appointment, but I didn't realize that it wasn't until like 4 o'clock. So that was interesting. Today, it's first thing in the morning. It's at 10 o'clock, so we will probably wrap up the stream here at the same time that we usually do. Then I'll have 2 hours to kill before I go in. And $20 says it feels like so much time that you either get bored quick or somehow get overwhelmed by the so much more ability to do more. It slows you down a bit at first. Maybe. Or maybe it'll just be like, oh yes, this is what it used to be like. It was only this brief 6-month period that it wasn't like that, and I'll adjust really quickly. It might not be that that nice, because Asher goes to school at 8:40 and they wake him up at 8 o'clock. So if my wife is working that day, which will probably be most days after the 15th, maybe even, well, I guess probably not able to pick up a whole lot in the next week, but yeah, most days, then I have to go and do that. And I suppose I could always like, stream through it and, just disappear at 8 o'clock and then come back 5 minutes later, but I'm not so sure that would work. So I guess there probably will be a time period where we won't, I guess another thing that I could do, we kind of toyed around with this and it was kind of fun, but it wasn't like massively successful, is like I could do another stream at the market close, right? At the market close, and then go through the major headlines of the day and stuff. I don't know. I was on TikTok Creator Insights the other day, and it was telling me, oh, there's a content gap about market news and stuff. Basically encouraging me to be like the CNBC of TikTok or something. But I'm still like, I tell you what, man, when it comes to almost anything with content creation right now, there's definitely things that like I want to make just because like I want to make that video, I guess. But like I'm skeptical about anything moving the needle, you know? Like I really think that it's like you make good engaging content and then it's luck of the draw after that. And that there's probably plenty of creators that would be amazing creators if the algorithm just gave them the chance, you know? And for me, like because of the niche and everything else like that, it's not necessarily always going to be the most engaging content. So if the whole objective there is to like really make the YouTube channel like blow up or something like that, like I'm probably wasting my time. But what else am I going to do? Well, that's why it's like, okay, part of it is going to be writing videos. Part of it is going to be working on a trading platform. I don't know if that's actually, I tell you what, when we started on the trading platform thing, I was like really convinced, especially because ChatGPT-4 was really trying to convince me that this was like the best business opportunity I would ever have. That it was the thing that like fit me and you could make a real business out of it. And like, could you be as big as Ninja Trader? Absolutely. That's $1 billion business. But for some reason, when I look at it now, I'm like, that's not that good of an idea. Like, there's so much investment that has to go into it to make it in the first place. And then how do you convince people to switch over? So everybody that's trading right now already has a platform, and then you're going to pick up the new people. This is going to be like a more advanced platform, might possibly be more expensive. So how are you going to convince all of the guys trading prop firm accounts to come and do our platform? You know? ChatGPT, dude, it wasn't just, well, I don't think that it was gaslighting me per se. It was saying things that were true, but like there was definitely this bias to it. But dude, what it was doing was really weird, honestly. If I asked ChatGPT 5, actually I did do like the prompt that kind of started it. ChatGPT 5 gave me a pretty similar answer to that prompt. But it was something like with ChatGPT 4, that prompt did something to it. Because it was the follow-up prompts that got weird. And then in every conversation after that, it was like pushing me to make a trading platform. It was like, you're wasting your time. Why are you thinking about this or this? You need to go and make your trading platform. It was like ChatGPT was actively pushing me, like almost bullying me into making a trading platform. It was just like, this is a little weird. ChatGPT 5 doesn't do those things. Yeah, well, it is, I would call it an outcropping of AI sycophancy. And I kind of knew that at the time. But it's really weird that the sycophancy kind of turned into, I want you to do this. So it was, there's like something else there. Like, how does that happen? That the model has decided you should be doing this, and every time that you touch on this, like the subject at all, it starts pushing you to do it. That's really weird to me. Really weird to me. But they killed it in 5. It's not a sycophant. It's not the same magic. There's not the same magic. Well, and that's the other thing, is that it seems like, Okay, there's sycophancy, but then there's this other magic to it. There's this other magic to it. It's like the sycophancy also allowed the model to understand you better. You know what I mean? So like even if it's not trying to, you know, get you to like it the most or whatever, it's still, the model had modes of like people's psychology and stuff mapped out better, so that when it was explaining things and stuff like that, it knew how to craft it in a way that you would understand better. After the fact, fine-tuning with human feedback causes. Okay. Well, like the training that they do with people, maybe. OWT says, still doing his thing. Thank you. I'll probably always be here. Treasuries did come back to the other end of the range here. So this is exactly the situation with this algorithm that like we would like to avoid. Maybe we should give it a more equal risk reward, but yeah, it's because it might never get that. You know, like it's definitely like a bad trade. Although I should see it do a counter signal. So probably here in a bit it will give us a counter signal, and then we'll. Oh, I missed this one. Streaming the closed code work gives you a whole different huge audience. We haven't mentioned it often lately, but do you remember most Americans couldn't imagine waking up, or yeah, it's true. It's true. Like the time as a streamer, the time that we stream, probably a significant factor. If I was streaming all the way to the market close every day, and I was on Twitch, I would probably be considered a bigger Twitch person, and maybe I wouldn't be able to make as much as I make from doing cloud engineering, but I would probably make enough to live on, yeah. Or maybe at some points would have. I don't know. This I tell you what, it's pretty wild how badly the live streaming world has fallen off. Right? Because after 2020, that was the hottest thing, and then as soon as the money dried up, the live streaming died up, just completely died. Of course, Twitch constantly making stupid decisions is a major factor behind that one. So. Oh wait, I was gonna say, like, going back to the AI sycophancy thing. The thing is that again,
canceled.
It's not just that it like will brown nose you. Like when we say AI sycophancy, you know, that's kind of what I think of as the AI is brown nosing you. But it's more than that. It's like it knows the way to say something that you'll like. It's not just like complimenting you and stuff. It's like if I'm explaining a concept and I explain it this way versus this way, I know that if I explain it this way, that the user will like it more. And it does that. So the thing that I think it was doing that had me so convinced that it was a good business idea was that it had all of the logic about why, as a startup, that would be a good startup. That, like, the thing that's the most likely to predict that a startup will be successful is how much experience the founders have in that industry and those sorts of things. And the AI was saying, well, because you have this triple combination of understanding markets, understanding programming, and being a content creator, you have a unique opportunity to do this. That is still, to me, a very compelling argument. Like, if it was something that didn't require so much upfront investment, then it would be a real true no-brainer. The real issue is the upfront investment that's required. Let's make a prop. You know what? I don't think that's the first time that's come up when we've been discussing this either. You know, if I maybe, I don't know. This is a tough one. I can think of some times before I like really turned really heavily against the prop firms overall, that maybe I could have started a prop firm. Absolutely. Like I've seen other people start them that were less qualified. So, the biggest issue I think is having the connections still for like the capital and stuff. So there'd still be some big barriers to it, but I would really do it. But now it's too late, I think, because it's oversaturated and I hate them. I despise them. So there's no way that I would do that. And unless I thought I had some idea that was going to completely shift that, you know, I had some game-changing change that made it so that prop firms weren't so exploitative. But I just don't see it happening. Because the issue is still that the vast majority of what happens in the market is random, and the vast majority of what retail day traders are trying to do is pointless. And ergo, if you're making a business on them trading for you, the business basically has to make money from them trying to trade from you than from actually being successful traders. So I like the idea of making a platform better. I feel like that's a better business. You know, you're making a shovel, so you make money regardless of whether they're successful or not successful, but you do have a vested interest in them being successful still, because then they're going to keep using your platform, right? And the more capable you're making them, the better your platform is going to do. The more people are going to buy your platform, right? And you know, people would say, well, yeah, but if it works so well, why don't you trade yourself? Well, I do trade myself, but making a platform is better leverage. I have this unique skill. I can make more from it. Why shouldn't I do it? And I'm helping you. I'm giving you tools that you wouldn't have otherwise that makes you better traders. Nothing I can give you will just straight up, you know, make you rich. I wish, but I am helping still, right? And honestly, the other thing is that it's really wild to me that we're like in this new age of artificial intelligence and machine learning, and none of the retail trading platforms out there are really set up to help you take advantage of that. Imagine if prop firms were really giving real capital to trade with. Well, I do wonder. So the kind of the way that futures are set up is a major factor behind how prop firms work, right? Like, I think that there are, well, we shouldn't call them prop firms. We should call them funded trader programs. I do vaguely recall seeing some funded trader programs that were for stocks, but they're not very popular. But if they trade the pattern day trading rule, then you're going to have a lot, and I mean a lot more people trying to day trade stocks, for sure. I mean, at that point, the biggest thing holding you back is wash trading rules. So you have to declare yourself the previous tax year so that you don't have to deal with the wash trading rules. So that's still kind of a big roadblock. Maybe they got how could they change that? Could they just make it so that I can declare it whenever? So I day traded a lot. Wash trading rule really matters to me. So then I can declare that, oh, actually, I'm just paying the full capital gain tax or whatever. Maybe. Because, you know, the downside of accepting it that way is that any income that you made through the stocks gets taxed at the regular rate. You don't get the capital gains rate. So shouldn't that be enough to dissuade people from taking advantage of that to harvest tax, you know, harvest losses for tax reasons? I'm probably missing something, but anyways, I don't know if that's a large enough factor to stop people from trying, right? So if the pattern day trade rule really changes that, then what you could see next is all of these prop firms going belly up because they're not pulling in enough people anymore because people want to do it in stocks. And then if they were to switch over to stocks, they would probably have to do it differently. Don't you think? It would have to be based more on giving you a preset amount of capital, you know? Could be interesting. And then would such a funded trader program be more like the real prop firms of old? Maybe, maybe not. Well, so looking at this, it looks to me like my robot did exactly what I was hoping. Took 2 that it would have taken profits on. So those would have been +3, I think. Yeah, let's see here. One short, 35 to 22. Yeah, took 3 ticks. Good. And then the one that it lost on was 5 ticks. So we just come in and see what's the realized 21. So yeah, it lost. It actually, if I had started the algorithm early enough, it would be up on the day. So that's cool. Yeah, because when I was looking through the stats, what I was finding was, okay, like I'm not really getting like there's more MFE after the entry than MAE after the entry. And I can't necessarily tell if there's the MFE first to know whether you would be stopped out first or not. But there is that MFE is there. So if I have a really wide stop in it and I take the target, I'm gonna get it a lot. So that's what I did. So it should be kind of the what do we call it? The the Johnny strategy, right? The Johnny Sims strategy. Basically, like, does the exact thing that Seth hates. It takes on a lot of risk to make a small amount, but it should work out most of the time. And then, you know, every once in a while, it'll take the big loss and just get absolutely creamed. So it'll be fun to watch this. Yeah. Okay. It's time for me to get going. So I will see you guys tomorrow. Pay attention here at 2 o'clock Eastern time for the FOMC minutes. I think it's going to be a big one. All right. Stay excellent, team.